Coming global shock. What could it be? I know you're sitting there, you're saying, I can look in 10 different directions and find something that's going to be an upcoming global shock. But what we're going to talk about today is a big one, and it's going to kick off a series on, I hope, economic insights here, and particularly as relates to history. And one of my contentions, of course, and many people's, is history always repeats itself because human nature never changes and it never will. And because of that, we make the same mistakes over and over again. And well, we're going to tear into it today and discuss what could be the upcoming global shock that's going to have really serious consequences. Let's get into it. Good morning once again, and it is getting into late October here. Now the fire really does perform a function, even though it is a fake one. It cheers me up and it makes me feel warmer on these cold mornings. It's a good chance to say, if you're not subscribed, subscribe and hit that bell for all notifications. There's a lot of different things on this variety channel, something for everybody to enjoy. All of this was triggered off this talk about prepping. I don't even know if you can prep for it, but just understanding coming global shock. Because somebody was mentioning to me that I didn't even notice on Friday, because I've been working real hard over the last week, and I got an email mentioning that, wow, did you see the big surge in silver on Friday afternoon? And I did not, and I started looking into it, and it went up $2 an ounce. I think we're up close to 34, somewhere around $34 an ounce, with silver closing, with gold closing in it pretty rapidly on $3,000 an ounce. And the question is why? And I've talked about this before. Why? And some of the most powerful moves in history in terms of markets and economics come at those times where when I say there's like a stealth bull market developing here. It's getting no attention because obviously we're in a time of AI. Everybody wants to talk about AI and NVIDIA, and all the attention and all the focus is on that. And that's like a big vortex that's sucking in plenty of money. Even though I've contended before that a little AI goes a long way, then there's going to be a lot of disappointed people when that train finally hits the wall, which it inevitably will. But when it happens, I don't know. But that's not our concern today. Our concern is what's going on with the precious metals, because number one, they're getting scant attention. Almost every week that goes by, gold particularly is probing and moving to new all-time highs. There's not one person that holds gold in the history of the world now that's still alive that has a loss on it. Okay, everybody's in the profit. Everybody's in the black when it comes to gold, right? Because we are at an all-time high. So, but it's not getting any attention, right? And it's really the untold story that's telling a story that we're maybe just starting to emerge from the murkiness of the future here. We have a couple confluences here. Number one, you have to understand that the United States of America, of course, it is a superpower in the world, but a lot of its power and a lot of its projected power now is purchased on what I call a credit card here, and we're running massive deficits here. Last year, the books just closed and reported we had a $1.8 trillion budget deficit. That means we spent $1.8 trillion more than we took in revenue. And if you want to talk about real sources of ongoing inflation, we could really concentrate on that. Because where productivity has not been earned in the terms of taxes being collected because of productive activity, and it's just borrowed because it's expedient, because it's politically wise to do so, because it shields taxpayers and it shields the citizens from the reality of borrowing, because they don't have to face any consequences of that borrowing in the short run. For the long run, well, we'll kick the can down the road. That's somebody else's problem. But in the meantime, there's money created out of thin air through borrowing, and also massive printing operations and things like that are going on. It's spent either sucking up money in the world or spending money that's just being printed out of thin air. And of course, that's inflationary. And a lot of that has to do, we know we're spending a lot of money on the immigration stuff and housing and all these trickle down things. And that's going to be the subject for the future immigration, where we're looking at one side of what's going on, one side of the consequences, but we're totally ignorant of the other side. But that's for a future one. But for now, we need to know, because if you listen to the pundits and the talking heads on Wall Street, on the CNBCs, the Wall Street Journals, the Investor and Business Dailies, the New York Times, etc., Financial Times of London, inflation's supposed to be coming down here, right? And yet, gold and silver have made the biggest increases over the last year, despite the fact that interest rates have fallen, which means inflation is supposedly under control. Well, we had this lull, if it looked like a slowdown, things like that. I'm going to be honest with you at this point in time. The gauges the government has to assess economic activity are so outmoded and so outdated now that it's losing its sensitivity to government, Department of Labor, and other organizations, commerce, are losing their sensitivity to what's really happening in the economy. Things have moved so fast with computerization, AI, and paperless transfers. They've almost lost totally the ability to see really what's going on with generating gross national product and things like that. It's almost become an impossibility. That's another whole video in itself. But what's emerging now is a trend of precious metals advancing in prices that defies the logic of inflation should drive up precious metals prices. And I'm not saying we're not going to have inflation, but is it not strange that our biggest gains in prices have happened at the very year that inflation is being tamed? No, my friends, there's something far more serious going on there, right? Far more serious. And it has to do more with the geopolitical realm than anything else. If you don't think the United States today and much of the Western world has enemies in the world, well, you live in a Pollyannish world that doesn't see things for what it is. We see China has increased in economic importance in the world. We know that Russia has been a long time adversary in terms of geopolitical moves. There was a time when things might, have come together a little better on that regard, but it didn't. It's just, it's like oil and water. It's not going to mix. And you have up and coming nations like, India, you have Brazil, and all these countries have felt, as their power has grown, that the stature of their currencies, or the importance of their currencies, has not kept pace with the reality of their economic power in the world. And I think that they've come together behind the scenes here, and there were finally some rumors coming out on last week that there may absolutely be developing another currency in the world, particularly for trade, that will be backed by precious metals. And this is something really important, right? Given a choice in trade between paper that's backed by gold and silver, and you might poo-poo it and say, so what? It's just a piece of metal or whatever. But that piece of metal has 5,000 years of psychological history behind it, wherein when times are tough, people instinctively not thoughtfully, instinctively go for the gold. Try overcoming that with a little bit of mass psychosis and things like, no, it isn't mass hypnosis and all that. It's not going to happen. To which you saw in April of 1933, when the bank panic was, Roosevelt was addressing the bank panic and the New Deal was being born. One of the very first acts that the new president did, probably less than 1 month after he obtained office in March of 1933, was to go ahead and call in all the gold that people were hoarding and holding, okay, right? Get control of the gold. Well, that still continues to today, right? So given a choice between something that's backed by something or versus something that's backed by the full faith and credit pledge of a government, well, you know, there'll be some reckoning going on of which side are we going to come down? Or, and you know that economics tells us that the more valuable asset, no matter what you might think about it, is the one that will attract the flows over time. Whereas cheap money drives itself into the ground over time. There's simply too much money out there in terms of United States dollars on a worldwide scene. It's just cheapening it, okay? And that's the problem that we're confronting now. Now, the implications of that are many. We are fixed in a world where it's almost like virtually nobody expects that we could have some type of black swan event where we do have the announcement of this, and all of a sudden our United States currency begins to go on a long and initially probably slow decline, but a decline towards a point where the only chance to rescue itself is to balance its budgets and bring more substantial fiduciary responsibility to its dealings. Right now it does. There's no pressure on it. I mean, it can do whatever it wants. It can float new money. It will puff up the Federal Reserve's balance sheet. The Treasury can go wild issuing new currencies and stuff, and there's no checks and balances. Other countries having an alternative trading currency could provide that sudden checks and balances that really upsets the power of the whole system. As far as like, you know, global war or whatever, possibly down the road. But people have the tools now to fight economic wars, which are much more powerful and have much greater implications on the average person. So the thing we have to really think about is, what is the message that's being sent by these surging metals while the rest of the sideshows are going on over here with AI and real estate rentals are booming and everybody's building rentals. Something's going on here. Something is going on here that demands our attention. There's a reason why that has nothing to do with inflation and things like that. That reason is what we need to know. And by the time that reason comes out, well, most of the gains will have been made by that point, because everybody will rush headlong in, and, well, we know what happens to that. In the meantime, there are implications for investors, not just in gold and silver, but worldwide and other things, particularly interest rates. Interest rates are the bedrock upon which economic success or failure rides. If interest rates are low, it means that the perceived risk in the financial system is low. Okay? As interest rates rise naturally, and particularly on the long end here, like the 10-year note and things like that in the United States, when the Federal Reserve cut interest rates, that 10-year note was 3.6%. It's now 4.1%. Okay, in other words, interest rates have been rising in the face of the Fed lowering interest rates on the short end. What they should have done, if all things being equal, were dropped equally across the across the board. They dropped in anticipation of it, but when the reality hit, they started rising. And as interest rates rise, there's also a perception that riskiness is rising too in the system. Think about it. If you lend money to somebody that's a good credit risk, I'll carry you for 5% or whatever. Yeah, you're good for it, right? And then you have the neighborhood stumble bum wants to borrow, and it's like, oh man, right? My chance of getting my money back from this guy is really a weak proposition. So I'm going to have to charge that credit card interest rate of 22, 25, 29% here. Okay, the risk is just that high. Well, it's the same thing with international borrowing and money exchanges too. It's a reason why places like Argentina have traditionally had a crazy high interest rates. They just break the back of economies and things, and just leave people more and more progressively poor as they try to break the back of inflation and things like that because of rampant overspending and money printing. It just becomes a total loss of fiscal responsibility. Just takes its toll. There's no cheating the piper when it comes to the free market system, okay? The invisible hands work one way or another, and they always do. There's no escaping it. You might for a little while, you might for a couple decades, you might for 100 years, but the piper will be paid, and the accounts will be balanced once again, and real value will come to the fore in terms of purchasing power. Many topics to cover in the future. If you've enjoyed this, please give it a thumbs up. I welcome your comments down in the comment section down below about what you think is going on these days in terms of precious metals. It's really the untold story. Yeah, we get a sentence or two that says, right, this is going on. The gold hit an all-time high today, 2,300, 24, 25, 2,600, 2,700, closing in on 2,800. Something's going on, my friends. There's a signal being sent here that nobody's hearing. All right, once again, if you're not subscribed, like and subscribe if you enjoy the content. And all the many other things that I do on this variety channel, I would love to have you along. In the meantime, enjoy the rest of your day, and thanks for watching.